Happy New Year, Trading Addicts. Welcome to the Weekly Watch List. This is your host, Jeff Kohler, aka The Option Addict, from over at www.tradingaddicts.com. So let's fire things up. Last day of the year, we saw a little bit of a sell-off, and from where I sit here in the S&P and where futures prices are trading right now heading into tomorrow's open, we're seeing a little bit of a reaction coming in off this 6-month trend line. Futures are up a little bit, and that level lines up on a couple of different places. I came into last week hoping for a little bit of an uptick heading into the year end, so that we could see a little bit of selling pressure that might take us a little bit lower, just might bring a little variation back into the market. But from here, I can see this trend line here at about 11.15, which used to be the old highs in the S&P. Futures are up, they're trading off, so we're likely to see prices gap up a little bit here at the open tomorrow morning and hold on to this trend, which I think is a pretty important reference point. If this trend line gives way, what I was ultimately looking for was a move back down to about 10.75, 10.80. But from where prices are set to open, I'm not so sure that's going to happen first thing here this morning. I took a couple bearish positions too at the end of the week just to get a little bit more delta neutral, scaled back quite a bit. But I'm looking to kind of re-up and put some positions on in different places. So let me take you through a few things that have caught my eye today. Before we do that, though, I paid a lot of attention last week to the McClellan, and I think it's at a really interesting spot. I'll pull it up right here, and you'll see that right now the McClellan is, it's registering a negative reading, but by 1 point, which tells me that we're smack dab in the middle of this range. The McClellan is neither overbought nor oversold. We took some interest to this last week when it registered a reading of positive 60, which does happen to be kind of in a relative overbought state. If you look over historical highs, that seems to be a reading of positive 60 to 70 is typically when the market starts to reach an overbought state. And so last week we saw some little selling pressure come in, which has brought the McClellan down to basically an even level, which means at this point from where the market sits, we have an equal risk of going higher and an equal risk of going lower. But I want to continue to watch this indicator, because if it does start to crack back down lower into negative territory, then I think some of the short positions that we talked about earlier in the week are likely to work. Let's do this, though. To kick things off, I'm going to start with a couple of buy the dip candidates and sell the rip candidates. So take a look. You'll see I also added my $10 darlings in there as well. I've been enjoying trading the small cap stocks here as of late. Let me take you through a couple of things that I'm watching right now. First things first, we'll start large cap, and let's go with Caterpillar. I've had my eye on this one for quite a while. Just because it's been sitting up here consolidating, it really hasn't made an attempt to move outside of this range as of yet, but it closed at a pretty interesting spot. So if stocks open up higher, if they're heating up and things are looking pretty good, I think Caterpillar is at a pretty low risk spot to anticipate the break of this consolidation range in efforts to move higher. So I do like the spot here. Caterpillar, beautiful options. They're easy to trade. So I like Caterpillar right here at 57. We'll see how it trades tomorrow. A couple of other patterns that are similar to this. Let's go to Joy Global. And if you look at Joy Global, I think you'll see that the setup is somewhat similar. It's at the lower end of this range. The highs don't line up as well, but you can see the consolidation range here. It's at the lower end. Now its counterpart, Bucyrus, which those two normally move. There's a pretty high correlation between those two. Bucyrus just absolutely took off in the last couple of weeks, while Joy Global has stayed down. And either that signals that this stock is, wanting to break down, it's wanting to separate here a little bit, or it has a little bit of catching up to do. If it's the latter, then I like the spot, because it's near the lower end of its range. If stock prices heat up, I'm going to look for stocks that are trading down, that are near reference points, and Joy Global is one of them. And at 51.5 here, if it starts to heat up towards its highs, this could be the an early spot to catch a fantastic move. I like Russia. If we're talking patterns and we're talking that whole setup, which Russia did hold up pretty well. And here's the pattern here. Another consolidation range, trading up towards the upper end. at a pretty good anticipatory spot. Even traded pretty well on Friday, considering that everything was melting lower. So that might be an opportunity to watch stocks like Vimple, which is also, if you look at this, my chart's a little bit messy here, but go out to a 1-year chart, and you'll see that those action points, they kind of line up down here. And Vimple's also been consolidating into a little bit of a symmetrical triangle. So that might be something to keep an eye on. Next, we're going to go to Polaris. And so I'm looking at stocks that traded pretty well, while the majority of the market melted lower on Friday. And this little guy caught my interest because it just happened to break outside of this little consolidation range. And there's some pretty decent volume behind it there on Friday. Traded up, broke outside of those highs. So this might be the start of a breakout here. Let's go over to Ralph Lauren. And if you look right through here, you can see a combination of highs that extend through here. You can see the lows that line up pretty well. Ralph Lauren sold off pretty good on Friday. Not a lot of volume behind it, but if the stock's going to break out, this is a spot where you want to buy. Coming in off the 20-day moving average, there's an angle of support levels, some lows that all line up through this area. So I think Ralph Lauren becomes pretty interesting here heading into next week. What about some reversals, some stocks that look like they're ready to break down, that are trading pretty heavy? I'm going to go to Lazard, which this one did trade pretty well. Got to admit, this thing traded really, really well on Friday. But what I like about this is it's kind of it's a real nasty looking, but it's kind of a head and shoulders pattern, if you will. So shoulder, head, shoulder, pretty clean neckline running right down here at about 36, and it's trading right around that neckline. And if it's not able to get outside of this 50-day moving average, if it starts to roll back down, that might be a stock to look to short. We can look at Kohl's too, ticker symbol KSS. And here's the neckline, give or take, right here at about 53. You can see kind of a shoulder through here, head through here, shoulder through here. You can see the outline of what looks like a reversal pattern to me. Excuse me. And so I think this stock needs to get down beneath about 53 in order to confirm a reversal. A couple others. So I've been keeping a really close eye on energy lately. You'll notice a lot of energy themes going on in the buy the dip, or excuse me, the sell the rip list. But this little triangle here in Diamond Offshore, if prices can get down here beneath 95 and crude oil stays beneath 80, that's also a pretty important piece of that puzzle. I think it's safe to anticipate a breakdown here in Diamond Offshore. I got ticker symbol FLS, Flowserve, which to me looks pretty toppy. You can see a neckline right through here that Flowserve is trading around. Shoulder, maybe a couple of heads through here, shoulder, but you get the drift. I mean, you can see the outline, and I think the technique and how to trade this remains the same. I'm going to go to NetEase, NTES, which did trade pretty well, got to admit, on Friday. Not a lot of volume behind it, but nonetheless, it's almost like a descending triangle here, and the stock is really fighting to stay above that 200-day moving average if you look pretty closely here. It's trying pretty hard to stay there, but I think if it breaks down beneath that 200-day and starts to work down towards the support level here at about 36, I think that's going to set up to be a really, really good-looking short. So that'll just about do it for me, folks. As far as price patterns, I didn't see a whole lot. Not a lot of the the more common names that we typically see that are setting up right now. I didn't see a lot out there. But as the week wears on and as stocks get a little bit of activity behind them in 2010, I think we'll set up some pretty good patterns in stocks to trade heading into the next couple of weeks. So I'm going to go ahead and leave it at that. Happy New Year to you all. This has been the Option Addict. That's been our watch list. Thanks for watching. Have a good one.